All right, hello everybody. Just want to do a little look through the S&P 500 and the sectors. Now, some of you have asked, like, well, I should have the S&P and the sectors being a different analysis, but you're kind of missing the point. I don't mean that by any, I don't mean any disrespect or anything. The S&P 500 is a combination of 11 sectors. They're the parts of the puzzle. So in order to get some insight into which way the S&P is going to go, we kind of need to, well, we're not kind of, we definitely need to look at the sectors. And some people have said, well, you should get more trading ideas, blah, 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 blah. Well, I don't mean it from you because the community really gets it. And I'm proud to have you stock market jobbers joining on early. We've only been up here for a month or two, and we already have over 500 people. And I'm glad because I could tell you're the people that want to learn. And I want to teach people that want to learn. I don't want to teach people that just want to be told what to do. This is not a trade idea mill. This is, you know, I was in the institutional trading world for 25 years. I mean, I hate to say that because it makes me feel old, but I've literally worked with some of the greatest traders in the history of, you know, trading. As far as I know, Steve Cohen, Mario Gabelli. So it all kinds to come together. What's the technical analysis? What's the levels? What are the moves? Where do the trading ideas come from? So let's just get right into it. All right. Here is the S&P 500, the SPY. This is the ETF which tracks the S&P 500. Now, what do we see here? All right. Well, as we talked about, and if you've been following for the last week or two, we expected to see some resistance around this 408 level. You can see we closed at 409. Okay, it's a $410 security. To be within 1 point is pretty darn good. All right. What happened is we got overbought. This red line is 2 standard deviations above the 20-day moving average. Why is this important? Well, because statistics tells us, or at least that's what they tell me. I'm not a statistician, but I do have like a, statistics for dummy book around here somewhere. Statistics for idiot book. Oh my god! I'm checking my arm here. I got a little tick on my arm. Let me get a little of this guy. Damn, man. All right, he's gone. I mean, I do live in the woods, but anyway. All right. So statistics tells us that 95% of data or trading should be within 2 standard deviations of the mean. If we exceed the threshold, meaning we get above this red line, well, that gets the attention of some of these algorithmic or trading models that are based on statistics. If we get above this threshold, they are expecting a reversion to the mean. There are a lot of trading strategies on Wall Street that are based on this concept of reversion. Okay, it's like a rubber band. We get too far one way, the rubber band comes back, and we get the other, and we go the other way. Now, what is resistance? Resistance is a level where there's a lot of investors who are interested in selling, either at or close to the same price. We could see here for the S&P 500 ETF, it's around 408. Now, here's a principle of markets, and a lot of people think that trading is like, it's like NASA science, or it's like figuring out how much the gravity in a black hole is, or these really sophisticated things. It's not. I can tell you firsthand, as someone who's literally worked with some of the greatest traders, at least in our day, that's not how it works, okay? There's no model, there's no secret formula. The way that the traders that are successful understand these basic principles that I talk about as stock market jobber. What price levels are important? What's the trend? What's the momentum? What's the psychology? If you start to understand this stuff, you're going to understand how to develop a style or a strategy that makes money for you. Think about it this way, right? Say you're a musician. You can go take guitar lessons from someone and they could teach you, all right, well, this is the key of A, This is the key of C, this is an A minor, this is a scale. But you're not going to go hire them to play a gig for you. Well, maybe you will, but I mean, if you have a gig where you want to play, you're not going to bring them in. You're going to use what they taught you to perform. Everyone has a different style. Everyone has a different personality. We have to look at different things. But if you understand these principles of price levels, momentum, trends, and psychology, you will be able to develop a strategy that works for you. All right, so let's go back here. 408, like I just said, some price levels are more important than others. Notice how this 408 level was resistance back here in September. What happened here? It became resistance again in December and January. Okay, levels that were resistance can stay intact for a while. Why? Well, there are people who bought here when it was at resistance and the market went lower, and all of a sudden a lot of these people say, I made a mistake. I want to get out, but I don't want to lose money. So if it gets back to the level I bought it at, I am going to try to sell. So we have remorseful buyers placing sell orders at the level they bought at. If there's enough, the level becomes resistance again. It's a very common thing in markets for a market to find resistance at a former peak. And that's why it's not magic. It's because of investment psychology. When we look at a chart, we are looking at a graphical illustration of psychology. All right. Now, notice here the level that was resistance turns into support. How could this happen? This seemingly miraculous thing, resistance becomes support. Well, now this is the opposite. This is seller's remorse. A lot of the investors who sold here regret doing so when the price goes higher and they tell themselves they're going to buy their shares back, but only if they can get them for the same level they sold them at. So if we have enough remorseful sellers placing buy orders at the level they sold at, the level that was resistance converts into support. Here we go again with the other way. Why would a support level turn into resistance? Once again, we have buyer's remorse. There are people who bought here who decided they made a mistake when the price goes lower. They place their sell orders at the level that was support because they want to get out at break even, right? So resistance levels can hang around, support levels can be intact for a while. Levels that were resistance can become support. Levels that were support can become resistance. This is so fundamental to be able to understanding trading. Now, a lot of people tell me like, oh, what's your trade idea of the day? Oh, give me an idea. Oh, give me your track record. Dude, if that's what you want, go somewhere else. That's not what we do here at StockMarketJobber.com. We teach people how to trade on their own. If you want to go have someone tell you what to do, God bless. I wish you the best. This is not for you. If you can find someone who's always right, let me know and I will close my website and I will follow them. But as someone who has done this for, 2.5 decades, I would be, let's just say I've developed some confidence because I've done pretty good over the years. Right? And it's not by being a genius. I'm no super genius. It's understanding these principles. Some price levels are more important than others. Levels that are support can stay intact for a while. Levels that are resistance can stay intact for a while. Levels that are support can turn into resistance. Levels that are resistance can turn into support. This is your roadmap. Now, we got back up to this important level. And now we're overbought. See this red line? This is 2 standard deviations above the 20-day moving average. Overbought refers to momentum. The vast majority of time, a market is within what is its typical or normal trading range. Okay? And if we get above that, we call it overbought. If we get below, we call it oversold. If it's overbought, it draws sellers into the market because they're going to be expecting a reversion to the mean. A lot of trading strategies are based on reversion to the mean. So if we get overbought and to resistance, we get kind of this double whammy. We got a lot of sellers who are around the resistance level or investors who want to sell, or overbought conditions draw sellers into the market. This is where we develop trading ideas, okay? Overbought at resistance, there's a good chance it's going to go lower. Now, it's up to you to figure out within your strategy or what you're looking at or what you know, are you a SPY trader? Are you an ETF trader? Are you a options trader? This is the roadmap. You got to figure out how to, and I will help you do that, but there's no one size fits all category. All right, so anyway, I've spent enough time on this, but let's just remember certain price levels are more important than others. Support can remain intact for a while, resistance can remain intact for a while, support can become resistance, resistance can become support. Overbought markets that get to resistance tend to sell off. All right, now the marketing people are telling me I'm going on here too long, so let me kind of go through this. Here we have the technology sector. The S&P 500 is a combination of 11 sectors, and different sectors drive the market at different times. Over the last couple of weeks, the two most important sectors are tech and financials. Why? Well, because people are afraid of what's going on in banking, so they've been selling their bank stocks and they've been putting their money into tech stocks. In the institutional trading world, you can't just go to cash. Sometimes you have these mandates. You have a contract that says, I can't be at more than 5% cash. So even though you want to go completely to cash, well, you might not be able to do that. It's not in your contract. You have to always be involved. So what you do is you sell the stuff that you think is more risky and go into stuff that's less risky. So once again, resistance, resistance, overbought. This indicator down here is a different way of looking at overbought conditions. It's not what we were just looking at with the standard deviations. But this RSI measures how far we've moved in 14 time periods. If the blue line gets above the red line, it indicates overbought conditions. Overbought markets that get to resistance tend to sell off, and this is exactly what happened. And if you've been listening to the stock market jobber, which is me, for some weird reason I like to speak to myself in the third person, this is what I've been saying. And this is how you make money. You make money in the market by letting the market tell you what to do. You don't guess, okay? You look at the market, you tell the market, one of our great students, who I love like a brother, I'm not going to give his name, but he makes this great analogy, and it's so simple, and I can't believe I didn't come up with this 20 years ago. You fish when the fish are biting. If the fish aren't biting, hang out and do something else. When do the fish bite? When do the stocks give you opportunities to make money? When they get to important levels and they make a reversion or they break through. So, overbought markets that get to resistance tend to sell off. That's exactly what happened here. Now, if we get down to this 144 level, there's probably a good chance we get a little bit of a bounce, and there's going to be some trades to be there on the upside. All right, resistance became support, could become support again. So not a surprise, but look at this. Resistance here, resistance here. This is something people take for granted. How is it that this sector that's worth trillions of dollars happens to have this same exact valuation back in August as it does now? And you could sit there for the next, 5,000 years, although I doubt you're going to live that long, but you could have 5,000 years to figure this out. And if you just try to think about fundamentals and you don't understand how important the psychology is, you're just not going to get it. For some reason, the 151 level is important. For some reason, the 144 level is important. It was resistance, it became support. Seller's remorse. People sold, price goes higher. A lot of them tell themselves, I made a mistake, I'm going to buy my shares back, but only if I can get them for the same price I sold them at. So if you have enough remorseful sellers placing buy orders at the level they sold at, it turns into support. When we get to support, that's a lot of buyers. Some of them might start to think, well, actually, I'm going to save that for the next slide. All right, so let's move on to the next slide. Ooh, look at. Wow, that's a cool one. I'm going to go with that. The honeycomb. Right? Remember the commercial honeycomb? Blah, blah, blah. I'm giving my age away here. Okay, resistance becomes support. Why would resistance become support? We have remorseful sellers who regret selling when the price goes higher. They tell themselves they're going to buy their shares back, but only if they can get them at the same price they sold them for. If you have enough remorseful sellers placing buy orders at the level was resistance, it converts into support. Now, we have resistance. Okay, and we're back up against the resistance. Why would a level that was support become resistance? Well, we have remorseful buyers who, they thought they were making the right decision. The market goes lower, starts to go higher. They tell themselves, hey, I made a mistake. I want to get out, but I'm only going to do so if I can get out for the same price that I got in at. And you have remorseful buyers placing sell orders at the same level that they bought at. If you have enough remorseful buyers placing sell orders at the level that was support, it can turn into resistance. Now, this is overbought. Once again, overbought is when a market is trading at an extreme above what would be its typical or historical trading range, we call it overbought. So overbought, that's going to draw sellers into the market at resistance. There's a good chance that this goes lower. It's a double whammy. Resistance is a large group of sellers. Overbought conditions draw sellers into the market. We can see here, you don't need to be a market guru. Support here, support here. This 120 level was important. This 120, 133.50 level was important. See, here's the thing, right? Well, that was pretty cool. You don't need to understand why these levels are important. You just need to understand that certain ones are. All right? The market is not chess. Chess is always the same. The rules are always the same. The market is like poker. You have rules, you have strategies, but we're looking at human psychology. How is this human psychology? Look at this. Support becomes resistance. Why? People bought here, price goes lower. They tell themselves, I want to get out, but I'm only going to do so if I can get out at break even. If you have enough remorseful buyers placing sell orders at the level that was support, it turns into resistance. Support becomes resistance. You can see it right here on the chart. I'm not lying. This is proof, right? A picture is 10,000 words. Resistance becomes support because of seller's remorse. Investors sold. They thought they did a good job. When the price went lower, goes higher, tell themselves they want to buy their shares back, but only if they get them for the same price they sold them at. Seller's remorse turns resistance into support. Support turns back into resistance. Okay? Now, what has happened? Resistance. The financial sector is at resistance. So we have the tech sector at resistance rolling over. We have the healthcare sector at resistance, which is overbought. We have the financial sector, which is at resistance. See, these are parts of the puzzle. These are parts of the S&P 500. The S&P 500 is 11 sectors, and we're looking at what are, pretty much the most important ones. All right, so let me get going here because they've told me they don't want my video to be too long. Communication services. Once again, you don't need to be a market guru or a former hedge fund trader. Everyone is so interested in hedge funds. Let me tell you something. As someone who was the head of trading at various hedge funds, just check out my hedge fund lesson under market lessons. Hedge funds are not as mysterious as people think. But anyway, what's important? Some price levels are more important than others. Resistance, resistance, getting to resistance. Support becomes resistance. Buyer's remorse. People bought, they regret when it goes lower, turns into resistance. Resistance becomes support. People sold, they regret it when the price goes higher, they go to buy their shares back. Remorseful sellers can turn resistance into support. It's like, look, man, I don't know what to tell you. If you think you want like some secret grail or some holy grail, I'm not the guy. Go find a different site, and if you find one, actually let me know. If you want to learn how to trade, and if you want to learn how the markets really work, I suggest you spend some time here with Stock Market Jobber, because within a month or two, I'm totally convinced that if you're someone who wants to be told what to do, go away. We don't want you here. If you're someone who wants to learn and be part of the community, you are more than welcome. You're welcome with open arms. Oh, that's the current thing. Okay. Industrials, obviously, you don't need to be a market guru. Resistance around 103.50. Support around 97.50. There's no way an academic could ever explain this. There's no way on CNBC or on Fox Business News they can explain this. If you're not a trader and if you don't understand how charts are graphical illustrations of human psychology, you will never understand the concept of resistance and support. Ooh, this says resistance down here. I got to change that. All right, I'm sorry about that. I am going to, make this support. Whoops. Support. Hey, listen, man, this ain't an English class. This is about learning how to make money. Sorry if I put in the wrong word. All right, resistance around 103, support around 97. Market memory. All right, I think I got to kind of wrap this up here. All right, last slide. This is our real estate sector. Once again, market principles. I hate to bore you. You might think that I got some secret system that I'm going to teach you here on Friday night on the holiday weekend, but the secret is understanding that you got to let the market tell you what to do. Resistance becomes support, becomes resistance, becomes support, becomes resistance, becomes resistance. The secret to being a successful trader is this. It's letting the market tell you what to do. The market's not going to listen to you. If you show up one day and think, oh, I'm going to do this, I'm going to do that, you're probably going to lose. If you show up one day and think like, oh, gee, what's going on in the real estate sector? Oh, we're at resistance. Oh, well, things that get to resistance tend to go lower. Maybe I'm going to look for some short ideas or some opportunities to buy puts in the real estate sector. The best traders let the market tell them what to do. And that's what we teach here at StockMarketJobber.com. Thank you for sticking with me. I know it's been 20 minutes. But hey, listen, 20 minutes, you could end up learning how to make money. That's going to help you for the rest of your life. All right, thanks everybody. Talk to you soon. Make sure you sign up for our YouTube channel, and I will hopefully see you soon. Thanks everybody.